This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this special market and economic update. In this video, we'll discuss President Trump's tariffs announcement and the immediate market reaction. The April 2nd tariff announcement has rattled markets as investors worry about how new trade barriers and escalating tensions will affect economic growth. Over the next few minutes, we'll provide perspective on what happened and dive into how trade policy can have ripple effects through the economy and the market. In this first chart, you can see some of the new reciprocal tariffs imposed against specific countries. These tariffs are referred to as reciprocal since they are based on tariff levels each country imposes on U.S. goods in addition to our trade deficits with each country. These numbers include the baseline 10% tariff that is being applied to all trading partners. The new tariffs include 34% on China, 20% on the EU, and 25% on all imported automobiles. These tariffs are also in addition to those already in place. So in the case of China, the actual tariff level would be 54%. Canada and Mexico remain subject to previously announced 25% tariffs related to immigration and fentanyl concerns. These latest moves show that the administration is resolved to make significant changes, but even these could be negotiated with each country over time as they were during the first Trump administration. Next, this chart shows that economic policy uncertainty has increased due to tariffs, taxes, and other policies. While there are many arguments for and against tariffs, markets fear that tariffs could raise consumer prices as businesses pass on these costs. When it comes to company earnings, current projections for 2025 growth have been reduced from 14.2% to 11.5%, with further reductions expected as tariffs raise costs and lower profit margins. Which sectors are likely to be impacted the most? Sectors with significant international exposure, as well as information technology, materials, consumer discretionary, and energy will likely face the greatest impact from tariffs and potential retaliatory measures. Finally, it's important to acknowledge the current market reaction. When we look across history, many events have caused concerns among investors over the past century. During these times, it may feel as if the market will never stabilize. And yet markets have performed very well over the past century, despite wars, pandemics, recessions, political change, and much more. This chart tracks the S&P 500 going back to the Great Depression. As you can see, the stock market is resilient in the long run, even if it may feel fragile in the short run. Market drawdowns naturally feel concerning. It's human nature. But maintaining a long-term perspective and focusing on logical, fact-based decision-making has historically been the most effective approach to achieving financial goals. Investors should focus on controlling what they can, recognizing that uncertainty is a constant presence in the financial markets. Yet history demonstrates investors can still succeed amid such uncertainty. Now, folks, this is why we have been emphasizing true diversification for some time now. Relying solely on stocks as your return driver and bonds as your sole diversifier can leave you with what we call a two-legged stool. Hence, our philosophy on multidimensional asset allocation, incorporating not just stocks and bonds, but also different asset classes and strategies, such as global macro, tactical, and other non-correlated investments. Please reach out to us during these times. We have solutions we can share with you that can potentially help you to smooth out the gyrations in the market. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, you can download our white paper titled Busting 7 Risk and Return Myths by visiting our website at dynamicwg.com or emailing us at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, please take care, everyone, and make smart, logical, and fact-based financial decisions.